What if I told you that a man from Nebraska, who still I noticed that the video title or key points to cover are missing from lives in the same house he bought in 1958 for $31,500, is worth over 100 billion? Your request, it shows empty quotes dollars. Warren Buffett didn't inherit his wealth, didn't start a tech company, and doesn't drive fancy cars or own private jets, yet he became one of the rich. To create an engaging and targeted YouTube script, I need to know what specific topic you'd like me to write about. Coolest people on earth by following a set of simple "you please provide." Today, we're diving deep into the 19 rules that transformed Warren Buffett from a newspaper delivery boy into the oracle to address in the video. Once you share this information, I'll create a compelling one of Omaha. These aren't just investment tips, they're life principles that can change how you think about money, business, and success. So grab a notebook. 1 500-word YouTube script following all your guidelines, including an attention-grabbing open, a clear intro because you, main content, and outro section, simple, everyday language, each sentence on a new line, proper call to action, and memorable closing. Please share the topic or title. We're about to learn the exact blueprint that created one of history's greatest fortunes. Let's start with rule number 1. Only invest, and I'll get started on your script. Write in what you understand. Buffett calls away. This his circle of competence. He famously avoided tech stocks for decades because he didn't understand how they made money. While everyone else was getting rich during the dot-com boom, Buffett stuck to businesses he knew. When the bubble burst in 2000, those same people lost everything while Buffett's wealth kept growing. The lesson here is simple. Stay within your area of knowledge and don't chase trends you don't understand. Rule number 2. Time is your greatest ally. Buffett bought his first stock at age 11 and wishes he had started even earlier. He once said that his wealth came from living in America for a long time and the power of compound interest. Think of it this way: if you invest $1,000 today and it grows 10% per year, in 50 years it becomes over $117,000. That's the magic of letting time work for you instead of against you. Rule number 3. Buy when others are fearful. During the 2008 financial crisis, when everyone was panicking and selling stocks, Buffett was buying. He invested billions in companies like Goldman Sachs and General Electric when their prices were at rock bottom. This rule requires courage because it means going against the crowd when emotions are running high. But the biggest profits come from buying quality assets when they're on sale. Rule number 4. Focus on the business, not the stock price. Buffett doesn't check stock prices daily because he's focused on the long-term health of the companies he owns. He asks questions like, is this company making more money each year? Do they have a strong competitive advantage? Are they led by honest, capable managers? If the business is doing well, the stock price will eventually follow. Rule number 5. Never lose money. This sounds obvious, but Buffett's second rule is, never forget rule number 1. He's not talking about avoiding all risk, he means avoiding permanent loss of capital. This is why he spends months researching before making any investment. He'd rather miss a good opportunity than make a bad investment. Rule number 6. Keep things simple. Buffett's investment strategy can be explained to a child. Buy good companies at fair prices and hold them forever. He doesn't use complex financial instruments or try to time the market. Simple strategies are easier to understand, execute, and stick with during tough times. Rule number 7. Invest in businesses with economic moats. An economic moat is something that protects a company from competition. Think of Coca-Cola's brand recognition or Apple's ecosystem of products. These advantages make it hard for competitors to steal market share. Buffett looks for companies with wide moats that will protect their profits for decades. Rule number 8. Management matters more than you think. Buffett has said he wants to invest in businesses so good that any fool can run them, because someday a fool will. But he also pays close attention to leadership quality. He looks for managers who are honest, competent, and think like owners rather than employees. Good management can make an average business great, while bad management can destroy even the best companies. Rule number 9. Price is what you pay, value is what you get. Just because a stock is expensive doesn't mean it's overpriced. Buffett is willing to pay a high price for an exceptional business with strong growth prospects. But he's always calculating whether the price he's paying is less than what the business is actually worth. This difference between price and value is where profits are made. Rule number 10. Read everything you can. Buffett reads for 5-6 hours every day, including annual reports, newspapers, and business magazines. He calls reading his most important habit because knowledge compounds just like interest. The more you know about business and economics, the better decisions you'll make. Information is the edge that separates successful investors from everyone else. Rule number 11. Don't diversify too much. While most people think diversification reduces risk, Buffett believes concentration builds wealth. He'd rather own a few excellent businesses he understands well than many average ones. His top 5 holdings often represent more than 60% of his portfolio. This concentrated approach requires more research but leads to better returns. Rule number 12. Think like an owner, not a trader. When Buffett buys stock, he imagines he's buying the entire company. This mindset makes him focus on long-term business prospects rather than short-term price movements. He's held some investments for over 30 years because the businesses keep getting stronger. Ownership thinking leads to wealth building while trading mentality leads to wealth destruction. Rule number 13. Be patient and disciplined. Buffett has said that the stock market is a voting machine in the short run but a weighing machine in the long run. Short-term prices are driven by emotion, but long-term prices reflect business value. This means being patient enough to wait for the right opportunities and disciplined enough to stick with your plan. Rule number 14. Learn from your mistakes. Buffett openly discusses his investment errors and what he learned from them. He regrets not buying Amazon and Google earlier because he didn't understand their business models. These mistakes taught him to be more open to new types of businesses while staying within his circle of competence. Every mistake is tuition paid to the school of experience. Rule number 15. Stay humble and keep learning. Despite his success, Buffett still considers himself a student. He surrounds himself with people smarter than him and isn't afraid to change his mind when presented with new information. This humility has allowed him to adapt his strategy over decades while maintaining his core principles. Pride comes before a fall, especially in investing. Rule number 16. Focus on cash flow, not accounting profits. Buffett cares more about how much cash a business generates than what its earnings report shows. Cash is what pays dividends, funds growth, and creates real value. Some companies look profitable on paper but generate little actual cash. Always follow the money, not the accounting tricks. Rule number 17. Ignore market predictions and economic forecasts. Buffett doesn't try to predict where the market is going next month or next year. He focuses on buying good businesses at reasonable prices regardless of market conditions. Nobody can consistently predict short-term market movements, so don't base your strategy on guesswork. Rule number 18. Live below your means. Despite being worth over $100 billion, Buffett still lives modestly. He drives a regular car, lives in the same house, and doesn't spend money on luxury items. This frugal lifestyle allowed him to invest more money when he was starting out and keeps him grounded today. You can't build wealth if you spend everything you earn. Rule number 19. Give back and find purpose beyond money. Buffett has pledged to give away 99% of his wealth to charity. He believes that money should be a tool to create value for society, not just personal luxury. Having a purpose beyond accumulating wealth provides motivation and satisfaction that money alone can't buy. The greatest success comes from using your resources to make the world better. These 19 rules aren't just about making money, they're about developing the mindset and habits that create lasting success. Warren Buffett's journey from a paperboy to billionaire proves that anyone can build wealth with the right principles and enough patience. The best part is that you can start applying these rules today, regardless of how much money you have. Which of these rules resonated most with you? Drop a comment below and let me know which one you're going to implement first. If you found this valuable, hit that like button and subscribe for more content about building wealth and achieving financial freedom. Remember, the best time to plant a tree was 20 years ago, but the second best time is today. Start following these rules now, and your future self will thank you for it.